Hi everyone, I hope you're all doing well, and today I'm going to talk about something which will change how the stock market is going at the moment. So at the moment in the stock market, if you were to look at your stock market portfolio, what are your best performing stocks? For me, and for many people, I will say that it's big tech. If you have any big tech or big market cap stocks in your stock market portfolio, they are the best performing stocks in your stock market portfolio. Personally for me, Shopify has been a very good performer, Square has been a very good performer, Facebook, Microsoft, those are all my big best performers in my stock market portfolio. And the size of them companies are hundreds of billions of market caps. Those are my best performers. What have been my worst performers in the stock market portfolio this year? It's all of my small market cap stocks. Small market caps for me are Corsair, which as you can see is pretty much flat or even slightly down. Another stock, a small market cap stock, is for me Gang. If you look at Gang, it's same again, pretty much flat or slightly down this year so far. And another small market cap, for example, is Tattoo Chef. Tattoo Chef at the moment, as you can see, is pretty much flat over the last kind of 6 months. It's not really done much this year. Now, the definition of small market caps is a little bit up for debate. As I go on here on Investopedia, you can see they describe small market caps as 300 million to 2 billion. Now, personally for me, I've got to say I think small market caps nowadays are a little bit higher than 2 billion just because valuations just get bigger and bigger. For example, a few years ago, we never had $1 trillion company, and now we've got quite a few of them. In fact, we've even got our first $2 trillion company. So for me, small market caps, I do like to class a little bit bigger than what is down here. I tend to say something between 500 million to about 5 billion. So my range is a little bit different here just because valuations have got a little bit crazier over the last few years, but that's my definition of a small market cap. So for me personally, I could put a few more stocks into that sort of list, but those are little examples. As you can see, Corsair 2 billion market cap or 2.6 billion market cap, Gang 700 million market cap, Tattoo Chef 1.7 billion market cap, but there's a few other stocks as well that I would kind of put in this list. Now, what do most of those big tech stocks, them good performing stocks, come under? A lot of them big performing stocks come under the S&P 500. You look at the S&P 500 here, very, very good so far this year. In fact, really good. You can see here, up 15%. Now, that's where a lot of the big tech are in, you know, the likes of Facebook, the likes of Microsoft, for example. Now, if we look at a lot of the indexes, a lot of these smaller market caps are in, which are, say, the Russell 2000. Russell 2000, we can't really use a P ratio on the Russell 2000 because there's a lot of, there's 2,000 stocks in here, 2,000 of the smallest market cap stocks are the Russell 3000, and in the Russell 3000 there is a few more unprofitable companies in there, but that's a very small market cap index. A very similar small market cap index to the Russell 2000 is the S&P 600, which is basically the S&P for all the small market cap companies. Now, just concentrate very closely on this chart. That is a Russell 2000. Let me just do it one more time. S&P 600, Russell 2000. Look how similar them charts are. They look so similar, don't they? So even though it has a few more of the more profitable companies in, you can see that both small market cap indexes have done nothing. In fact, the peaks are nearly at the same. The bottom of the charts are nearly the same. Now let's just compare that back to the S&P 500. The S&P 500 has been on such a good run. That chart there, the S&P 500, looks nothing like that one. The S&P 500 is going like that. If I was to go onto the Russell 2000, for example, you can see year to date, look at that, it is trading at a big range here. It is struggling to go below that range, it's struggling to go above that range. And all of this year, the Russell, the S&P 600 has traded in that range. And if you own any sort of stocks that are small market caps, that go in that sort of 3 million to 2 billion range, or I like to say a little bit higher than that, you'll notice a lot of them stocks, if you own any of them stocks, those are the stocks that haven't really done anything. In fact, the only times they probably have done something is these little peaks here. And them stocks will probably be the worst for you at these little drops here. So a few weeks ago, I'm pretty sure you would have felt like a few small market caps have been pulling back. And you would, if you have a portfolio of any of them in, you would have felt it, especially if you have a portfolio that's built around just small market cap stocks. Then it would have been pretty much a year of your portfolio being flat. And that's also a little point out there to diversification. Don't forget that. But this is the little change that is going to happen, in my opinion, at some point in the stock market. Don't know exact time when. Potentially it could be coming up. But when you start looking at the valuations now, this is the forward P of the S&P 500. So this is the stock or the index that's been performing very, very well recently. Look how high this is historic to previous valuations. Now this is the forward P, so this is earnings for the next 12 months. So this has no CV numbers in here, no damaging earnings that are coming up. This is fair where the S&P is at the moment. You can see here we're trading at a 21. Now, when I first started getting into the stock market, normally you would have said the S&P is round about a 16, and you would value a lot of stocks off a 16p ratio. Recently, we've been a little bit more generous, and we start saying 20 now, but even now at 21, we are historically a lot higher than where we should be and are normally at. And that is shown as well with the companies that have done well. The companies that have done well, the valuation's gone up and up and up and up. Now, the thing is with the stock market, even though we're quite high right here, we could go to 22, we could go to 23, we could go to 24. But like everything, like February, when a lot of stocks went bonkers and got too carried away and kept going up and up and up, there's a point always where we run out of buyers and the stocks stop going up. Now, like I said, this could still go to 22, it could go to 23, 24. But at some point, people go, enough is enough. And when it's this sort of valuations, you run out of buyers, and it will either go down to a fair valuation, or we will flatline and valuations will catch up, and you will see what happens to the S&P 500. It has a pause and valuations catch up, or it dips to go to the correct valuation. And I think at some point, sometime soon, that is going to happen, because there's always a point, the cut-off point, where it goes, right, that's enough. Now compare that to a lot of the small market caps that haven't done much this year. This is the forward P of the S&P 600, the one that I showed you a little bit earlier, the small market caps. Now I can't use the Russell for a forward P because, like I said, there's a lot of unprofitable companies in there. The S&P 600 I can do. Now look at this. This is very fair valuation, and in fact starting to get a little bit lower than fair valuation, and it's a 15. So the difference between the S&P 500 and the S&P 600 is huge. There's a big valuation gap between these two indexes. Now the gap is getting bigger and bigger, and it's, especially if you look at the S&P 600, you look at the valuation, because the S&P 600 stocks haven't done anything for a while, but their earnings are increasing, the valuation's dropping. Now the big change that I think is going to happen in the stock market in the coming few months is the switch here. At some point, people are not going to start buying the S&P because the valuation will just run out of buyers. When that happens, what are people going to go to? They're going to rotate to the S&P 600 because it's a lot cheaper valuations. Now, if we just pop back to the screenshot that I showed you earlier of the Russell, you can see here recently we bounced up and we are getting near that range again. So when we get near that range again, it could be very interesting, and this could be the point of when if we break that, is when we see buyers come in and the Russell starts picking up, or the S&P 600 starts picking up, and then the rotation happens, because the rotation will happen. It's going to happen at one point, because you can't keep stretching. At some point the rotation happens. At the moment, the rotation hasn't happened for a good, nearly the whole year, all of 2021. But this is going to happen at some point, and then what has happened recently is we've had the bounce. And once we've had the bounce, as you can see here, we, apart from this point here, we bounce and we tend to test. We bounce and we tend to go near the top. We bounce and we tend to test. So this could be, once again, the bounce, and we go to the top and we see if we can break it. If we don't, we probably will go through that cycle once again for a few months. But what I'm keeping an eye on is this potentially could be the time when we do get that rotation. And I guess this goes to what are the best stocks to buy at the moment. If you kind of know me and are on Patreon, I guess, and know what I've been buying, you know that I have not really touched many big tech stocks for nearly the whole of 2021 because their valuations don't just keep going up and up and up, and the valuations are very rich. And I don't like doing that. When stocks are going up, I don't like buying. I like buying the stocks that are beaten down and at dirt cheap valuations. What's at dirt cheap valuations right now? We've got Corsair, we've got Gang, we've got Tattoo Chef, and a few other ones as well, but I want to keep it simple today. So one thing that I'm looking out for now, and I think this is going to be the big change in the stock market, and it could happen in the coming few weeks, or it might take a couple more months yet for that rotation to happen. But this, in my opinion, is what will be the big change in the stock market and will be the big rotation coming up. Like I said, it could happen in a few weeks, it could take a couple of months, but you can see here the valuation difference, and in my opinion, where the best buys are and what I've been buying at the moment, and the little change that will happen in the stock market at some point, and where the money will rotate to because the better valuations are there. And that's one thing that I'm really keeping an eye on at the moment, and I thought I'd share with you guys. And in my opinion, it will happen at some point, and when it happens, you'll see a lot of these small market caps start kicking on, and if you've been buying them, I think the rewards will come in. So I thought I'd share that little bit of research that I've been doing recently with you guys. Hope it was useful. If you could, hit the like button. If you're new and you found this video helpful, subscribe, and I'll see you next video.